Hello and welcome to This Week in Bitcoin for Tuesday, the 7th of November 2017. Today we're going to talk about a dozen articles or so, all related to the price of Bitcoin and what's been happening with the technology this week. But starting out, let's begin with the price. Last week we started at just about $6,000. We had a lot of trading on November 2nd and 3rd, which really saw the price increase to over $7,000 for the first time. Then in the last couple of days, we've seen it tail off and stabilize at around $7,100 US. The first article we have to talk about today is Bitcoin prices still firmly above 7,000 without China. It's a piece by Forbes.com written by Panos Mordokoudis, and it explains that despite the fact that China has closed exchanges and the surrounding panic, the price of Bitcoin is still firmly above 7,000. Jamie Dimon accelerated a panic back in June and July of this year by suggesting that Bitcoin was a fraud. Analysts, however, like Simon Dixon, for example, were incredibly bullish on the currency, and during the panic they were saying things like, look, this is an opportunity for hedge funds and institutional buyers to take positions in the currency at reduced rates as retail sellers exited the market. That's exactly what happened, of course, and as institutions bought in, confidence increased and prices rose to all-time highs. It's really all about confidence, as this article points out. Panos explains that regulations in Japan and the United States have been aimed at protecting consumers recently. You can see this in decisions like the one by the SEC to ensure that ICOs meet with the same regulatory conditions as IPOs, and then also some of the changes that Japan has made recently around the operation of exchanges. All of this has resulted in an increase in investor confidence in cryptocurrencies generally. This article as well goes into the fact that one of the reasons why currencies are going through a boom is because low interest rates are still persistent, and these are supporting growth, meaning that investors do not have to sell one asset in order to buy another, as was the case back in the old days of normal interest rates. Article 2 is a piece by Bruce Hunt, a longtime holder, occasional trader, early adopter, and contributor for wespost.com. He says that the alarming rate of large banks, tech giants, adopting blockchain technology is my wake-up call. He uses an analogy from Jeff Bezos, chairman and CEO of Amazon.com, from back in the spring of 1994. And here's a quote from Jeff when he talks about the wake-up call was finding that startling statistic that web usage in the spring of 1994 was growing at 2,300% a year. You know, things just don't grow that fast. It's highly unusual, and that started me thinking, what kind of business plan might make sense in the context of that growth? Well, Bruce goes on in this article to explain that the massive increase in adoption of cryptocurrency is what has finally convinced him. He has a really excellent graphic explaining the difference between centralized, decentralized, and distributed networks, and why this is important for his thinking about the increase in Bitcoin adoption. He also points out that his big interest is in Ethereum rather than Bitcoin, and that this is supported by the Enterprise Ethereum Alliance, which was formed earlier this year. As some of you may know, its members include Microsoft, Cisco, Deloitte, JP Morgan, Toyota, just to name a few. It connects Fortune 500 companies with technology vendors on the Ethereum blockchain and experts in the subject matter related to the blockchain generally. There's a massive number of companies who are participating in this program. And the final thing that Bruce points out is that it took 9 years for cryptocurrencies to reach a market capitalization of $100 billion, and it's taken less than 5 months for them to get to $200 billion. Although he's only an amateur investor, he anticipates the market capitalization of all currencies to reach $600 billion sometime next year, which would far exceed the current market capitalization of Amazon.com. Next up, an item on Bitcoin.com. China monitors booming OTC Bitcoin market after shutting down exchanges. You'll know if you've been following this for the last few months that China closed all Bitcoin exchanges on the mainland a few months back. The result was a huge amount of panic in the Bitcoin market and Chinese buyers and miners going offshore to markets like Hong Kong, South Korea, and Japan. The article reads, after shutting down the country's Bitcoin exchanges, the Chinese government is monitoring the booming cryptocurrency over-the-counter market A recent government report shows that 680 million yuan, approximately 103 million US dollars, were traded in the last 2 weeks of October on the top 3 international OTC trading platforms. They don't actually list the over-the-counter trading platforms here. These are similar to websites like localbitcoins.com, where you can actually go and physically trade Bitcoins with someone else for cash. Presumably, the Chinese government has done this and allowed this for the express purpose that it protects consumers, as it means that they have to actually physically go down to an OTC exchange in order to purchase the Bitcoins. This also gives the ability for the seller in China to exercise some caution and guarantee that they know who their customer is. This was a big issue with the exchanges being traded earlier this year. Information of note from this article is that the share of over-the-counter trading has risen from about 5% up to as much as 20% on the platforms that were mentioned earlier. As I mentioned, trading volumes on local Bitcoins, Paxful, and CoinCola accounts for up to 70% of all over-the-counter trading volumes settled in China. The transaction volume of all 3 platforms totaled 680 million yuan, of which the transaction volume on the CoinCola platform in Hong Kong significantly increased. The committee concluded its report adding that the National Internet Financial Risk Analysis Technology platform will continue to monitor the development of over-the-counter trading. The big takeaway from this news article, if you're not a Chinese investor, is that demand for Bitcoin in China remains strong. The fact that the Chinese government has decided to close exchanges does not mean that people do not want Bitcoin anymore. What it does mean is that they have taken action to protect their consumers, and the news coming out of China right now is that they are currently putting together a series of regulations that would allow those exchanges to reopen. The next story comes to us care of TechInsider, who have a great article and video all about what it's like to try and spend a day paying for things in New York City with either Bitcoin or a bar of gold. And if I can get the video to play here, I will show a clip of it right now.
So I set out to see how difficult it is to spend Bitcoin and gold in New York City. As far as I can tell, the only person that accepts gold is Donald Trump in 2011, who accepted 3 gold bars worth $176,000 as a down payment on some commercial property. I purchased 100 grams of gold bullion from bullion trading in New York City. The price of gold at the time made this bar worth $41.47, but with fees I paid $4,268, a markup of $121, or nearly 3%. At the time, Bitcoin was trading around the same at $42.02. Purchasing 1 Bitcoin on the popular trading platform Coinbase cost me an extra $63. They have a fee of 1.49%. So what can I do with my alternative currencies? First, I went to my daughter's preschool to see if I could put a deposit down on next year's tuition. This is $4,000 worth of gold.
While it is nice and shiny, unfortunately, we don't accept bullion for tuition.
Okay. Well, do you accept Bitcoin?
We do.
Did anybody actually pay in Bitcoin?
Yes, we've had about a handful of parents that have paid the entire tuition since last summer in Bitcoin.
So this is a great short clip explaining how easy it is to buy things with Bitcoin as opposed to with gold. It's a really fantastic thing that organizations and publications like TechInsider are going to the effort of making videos like this. Every single company like this that goes out of their way to dispel a negative myth about Bitcoin is doing everyone else's job for them and is making it easier for people to justify taking their money and their store of value out of things like gold and putting it into cryptocurrencies like Bitcoin, Ethereum, Zcash, etc. It's a great thing, and we should all be really happy that this sort of stuff is going on. And the last thing I'll say is that you may have noticed this is the first episode of This Week in Bitcoin. If you enjoyed the show, if you could please give us a like and subscribe. We will have more episodes out every week. We also have a special offer to give to anyone who's listening. Here is a coupon code for Genesis Mining. If you're not mining your cryptocurrencies with Genesis, frankly, you're doing it wrong. There is really only one choice in this industry, and they are it. If you have a rig at home, or if you're using Amazon Web Services and some kind of crazy Ethereum hookup, please stop. Go and use this Genesis Mining coupon code. save 3% on any purchase, and will get a very, very small benefit as a result. Thanks very much, and I hope to see you next week on This Week in Bitcoin.